Welcome everyone to this episode of Bodhi. It's an indeed a pleasure and an honor for me to host Juan, um, who's a leader of commercial strategy and execution at Holcim. We've known Juan for a while, and myself, Raj, I lead manufacturing and healthcare for Polestar. And thanks everybody for joining. Hopefully, this session is going to be interactive and free-wheeling, and we're going to dive into the wealth of experience that Juan brings to the table. We're going to talk about Juan's personal career, how he kind of looks at RGM and go to market, both from a strategy execution perspective, and in the process, hopefully we'll have some humorous banter as well. So the intent is not to make this an Anderson Cooper show, but more uh, kind of a Jimmy Fallon show, if you will. So Juan, firstly, welcome. Really a pleasure and an honor to have you here. We have known each other for a while, so I'm sure the audience would be quite keen to know a little bit about who you are, what you do, and how excited you are to kind of come to this forum and share your experience.
Thank you so much, Raj, and thank you everyone for joining. It's a pleasure to share a little bit of my experience and, of course, to also learn from everyone in the call. As Raj mentioned, this is something that we want to make very interactive because I firmly believe that the learning is where we all participate and is not a monologue from us. So please really engage with questions and we will try to answer the best we can. As part of my background, I'm Colombian living in Mexico City. I've been moving from industries. I've been working for the last 20 years in the commercial function. I'd like to say on the strategic and brain, let's say. So I worked with PepsiCo for a while, with Sanofi on a global role, and now with Holcim on focus on Latin America, mostly on commercial strategy, revenue growth management, go-to-market design and strategy, and being the enabler for the sales rep that are the ones really leading the charge out there.
Fantastic, fantastic. Thanks for that great introduction. Viewers, as you know, today's topic is revenue growth management. This is probably the sequel. We had a session on revenue growth management, which was led by my friend and colleague Saurav, who heads CPG. So today is like part two, and revenue growth management is a very broad topic. But today we're going to slightly broaden it even more and focus more on go-to-market, not kind of restricted to some of the tactical levers of RGM. So let me kind of tee this up by presenting a very conceptual diagram of what we mean by revenue growth management. We'll just kind of give it okay. Is my screen visible? Juan, can you see my screen? So
It's
this
loading.
is the so this is a structure, this is a framework that BCG laid out, and I'm sure all consulting firms have their own spin to it. But this is exactly what revenue growth management or what go-to-market really means from a framing perspective, right? So what is it? Where does it start? Where does it end? What are the different echelons? What are the different processes? So, and as we speak, with the advent of advanced AI analytics, some of these boundaries are getting blurred. So it starts all the way from your priced structure, your pack structure, your assortment. It moves from price structure to pricing optimization. How can you really optimize? Keeping in mind various extraneous and endemic factors. It also talks about market mix management. How do you really rationalize if you have a finite pool of marketing funds? How do you kind of ration it across different marketing channels? It talks about promotion planning. It talks about what are the contractual T's and C's, the trade terms that you need to enter with your distributors or retailers. And finally, there is a virtuous linkage back to supply chain, because all of this kind of becomes smoke and mirror if your supply chain strategy is not able to align with your marketing strategy. So it's essentially it's a complex space, right? Different companies define RGM or GTM with different lenses, but this is probably a widely accepted framework. So the reason I wanted to tee this up is question for you, Juan. Juan, I know you are in Holcim, but prior to Holcim, you've been in a variety of industries. Is this a particular framework that you feel the industry is used to looking at RGM, or this is a framework that's fast evolving? Are there certain pieces that are no longer relevant? Some pieces are, over-indexed. How do you see RGM or go-to-market from your vantage point?
I think this is a very comprehensive and it's a good way to look at it, but the companies are still trying to figure out how to implement this on their industries and the realities. You will find different levels of maturity in each of these pillars depending on the industry. But I think it's when you put it this way, it's very comprehensive and it gives you a reality on or where to look at if you don't have the pricing strategy well placed. But you move something that I've seen a lot is trying to fix the strategy with the tool right away without having the thought on where you go you must go and how do you sign the strategy. And it goes along the way in the same way. You will find many different opportunities. Many haven't even thought about trade terms being a great pillar or great way to stimulate the push on the channels and reward your customers the right way, bringing ROI into the conversation. So I guess it's a good way of putting RGM in a structured way. What I think is when we talk about RGM and when we were thinking about how to do this conversation is RGM is just let's say part of the brain of the strategy where you design, but the go-to-market strategy is even bigger, is comprehensive, includes RGM, and it links the realization of all these well-thought strategies at the moment of truth with the sales reps, right? So that's why I personally think that the connection between RGM and the execution and the go-to-market strategy and execution is that important. Is the core thing, because at the end you could have a great well-thought strategy that means nothing if you cannot connect to the day-to-day of the sales rep. I think we stated in the beautiful piece that you guys developed to promote the call. There are numbers behind this. Bain also states that mostly 20% of the strategy is being realized by the sales reps because sometimes it's disconnected or it's too complex for them to really implement on a daily basis.
Yeah, no, fantastic, fantastic. I think that's a perfect segue to the next part, where I think let's talk a little bit about what is the current state of the union when it comes to go-to-market and RGM. We will definitely dwell on the behavioral aspects because as you bring in more quantitative-based modeling, you bring in more data-based segmentation, targeting, market mix modeling. Obviously, you're dealing with a lot of reps who are in the market who know their customer. There's a lot of tacit knowledge. And it kind of becomes a bit of a behavioral, barrier to say that, okay, how can AI or how can ML come and kind of give me certain recommendations and overrule what I'm looking at? It's basically a little bit of change management, but what we'll come to that. But before that, my first question is, how do you see this, space evolve? Like there used to be a time where go to market was all about you have a fantastic product and you know which market to target and you price it properly and then you have very effective salespeople. That kind of solves a lot of problems, right? But in today's market, when you have a lot of new products coming in, the very nature of products are changing because even if you take your industry, right? So every 18 months, I think the Moore's law is kind of bearing out not just in tech, but also in other places because there are new product congeners coming in, new product modifications coming in. There's differential pricing coming in, new markets are being opened. There's a lot of restrictive trade and volatility. So if I were to kind of ask you to do some forced prioritization to say that, okay, as an RGM or as a go-to-market leader, what are three, four things that kind of keep you awake at night? What would those be?
I think the first one is, of course, to guarantee that we have the pack and the price right. You cannot overcome a lack of design on the pack price and the right price with enough muscle on the sales reps. If you don't make it right for them, they will be powerless to offering something that is not connected to the need of the customer. And if it's the same for B2B and B2C, right? In B2C, I like to think that you have this push with your customers and you have the pull with the consumer or the user. You need to make sure that you understand what are you solving for. And with the channel, you will do trade terms, right? You need to make sure that you are incentivizing them in the right way. We have seen this opportunity in many industries, and it's the lack of ROI conversation. We give the things for granted, and the customers are entitled to having these resources for their businesses. And when you try to switch the conversation to ROI, that's where the tricky part comes. When you are in B2C, in B2B, you could have different models, like you're talking to different persons within a big organization. You also have to define the persona that you're talking to and try to identify the right things that will move them forward, and to identify those ambassadors within the company that will move or promote your product and your value offering within the company. So when you finally reach to procurement, because those are the let's say the bad guys closing the deal, you will have enough arguments on why your product or your solution is the right one, right? So it's trying to identify those value driven process elements that will help you land at the right conversation, being B2B or B2C. When you talk about execution, if you sort it out right, the value proposition, the price and the pack correctly, into the day-to-day of the sales rep, you be very conscious of the span of attention that they will have for your product or for your set of products, and the same span of attention that they will get with their customers, right? I always try to take this example from pharma, where the pharma reps will talk to a doctor that have 3 to 4 minutes between consultations to get the message right. And these guys are masterful. They already crafted the way of selling in less than 3 minutes, very complicated, let's say, product. And they have a promotional grill when they really know how to prioritize the key messages. Is very detailed in actually. So they have everything sorted out. And in that way, you are optimizing for them, not just for the product manager or the strategy that we have. You have to be very mindful of the key elements that the guy will have to use to convince your stakeholder or your customer, and that's transferable to any type of industry. In some cases, you will have more time to discuss and to debate, but at the end, it always comes back to the key elements of the value proposition that you need to communicate, and of course, helping the sales rep to adapt from type to type, from region to region, from customer to customer, because the more you know that your customer, the more elements you will have to promote and to build the sales pitch correctly. But that's why we are talking about go-to-market, not just RGM strategy, because we are really nailing it down for them, designing for the execution of the sales rep, not just for the strategy, let's say.
No, absolutely, absolutely. In fact, I was very interestingly, talking about pricing errors, and I'm sure our, viewers will have a lot of questions bubbling inside as you're making this conversation very anecdotal. You're sharing your, wealth of experience. So I was reading this interesting statistics, which says that I forget, probably it was a McKinsey research, said that large organizations, they lose almost 3% of their revenue because of pricing errors, right? Um, you don't get the price right. And that has always been the holy grail in consumer business, even in pharma, right? What should be the right price? So that's why, especially if you look at the developed markets, nobody follows the listed price. So you have an MRP, you have a listed price, and then you have, death by 1,000 cuts. You have 1,500 variations. This is institutional pricing. This is, a trade promotional, the promotion master can proliferate. And 3% of revenue is sizable in today's. And it's just not, you're not just bleeding revenue, but you're also kind of, bleeding or relinquishing market share. In your experience, do you see this to be a prevalent area where companies are trying to solve getting the price right? Or you feel that's not the right problem to look at because you will never be able to get the price right. It's something like demand forecast in supply chain, right? Everybody tries to improve forecasting accuracy, but forecasts are meant to be wrong. But rather than trying to get the price right, try to identify certain countervailing measures in which you can respond in case your product or your SKU is facing a price war, or in case you've not got the price right. What is your strategy to defend if your rep comes and says that your product is overpriced, you guys just did not get the pricing right, and therefore I lost a customer? I'm sure this is a day in the life of Juan. How do you deal with those situations?
That's an awesome question because if you move, I guess it depends on the who you're talking to and the type of demand probably that you're solving for it. So if you're talking about aggregated demand, let's say consumer FMCG type of things, the product it's a formation of the condition of the market, right? So it's easier, let's say, to land to a specific product because you have many competitors, you have certain variables are already defined by the market, and you just have to play along with those and be mindful or how you, because there is also an opportunity to communicate value with the price, right? If you discount too much, if you price your product below the average of the market, you are communicating value, and that's also destroying the brand proposition. So you have to be very mindful on how you position in terms of pricing. I also work in direct selling type Amway or Avon type of things, and they always talk about price positioning and the price realization, and that's also a very common term in most of the industries. So your price position have to be according to the brand or the value that you want to communicate, and then the realization comes with all over the place, depending on the also the channel. So talking about consumer pricing and or user pricing, be mindful of the value that you want to communicate, and don't abuse of the trade promotional activity. Everything that you leave on and everything that you give too much to the consumer, they will internalize that as part of the price. And where you take out that, the price or the volume probably will drop because of the lack of the promotional activity. So, and when you move to less massive or less aggregated demands, you start to play around with different variables, and the channel become more and more important. And it comes back to identify the right personas that you are talking to and what moves them, and that's where the value-based pricing is the mandatory thing, right? I will never adventure to not to have a pricing strategy and a price defined where I want to land, but it's true that you have to be flexible along the way to understand what I'm gaining out of the price because of the deal, right? And that's cross-selling, that's a portfolio strategy, that's a different reach with an audience that you don't have yet. So all those type of things need to be considered when you define your pricing, your landed price. It's not just, in most cases, you're selling a portfolio of products or a value proposition or products and services. So make sure that you are pricing for the deal and not just for your core price. In some cases, you have prices for the system, and you already know that you will lose money in some products, but for selling the system, you will be very profitable, and you will leverage also your plant, your production capacity, the road, the logistic piece. So make sure that you're selling and optimizing for the system, not just for the product.
Yeah, yeah, no, absolutely. No, I think you bring up a very extremely valuable point, something that has been the, I would say, $1 million question or a holy grail for and we have been learning this from B school, that what is value pricing, right? How much do you know that a market will bear, right? And that's the $1 million question. You have frameworks, you have different optimization tools, but a lot of those optimization tools are very deterministic, and some of that data has previously not been very easy to extract. As a result, this has always boiled down to be a gut decision, right? So whoever is closer to the customer, that individual with his or her wealth of experience, they would have said that, yeah, this is what I believe is value. So it's always been a subjective. And I personally believe is with AI coming in, right? This has actually democratized that whole analytics. It's made that analytics very explainable and very transparent, right? Because if you can look at sentiment analysis, you can look at social data, you can look at inflationary data, and you can add all that, run a series of iterations or algorithms, and then come out with various scenarios, and then allow your field force to really stress test those scenarios. Couple of those use cases, I think we have spoken over the last couple of weeks. So my question to you is that, do you see fundamentally this whole value pricing equation changing with AI coming in? Do you see customers or companies really leveraging different sources of data? And how do you see that happening today, or probably, in the next few months, versus how it used to happen as more as an art of the possible few years back? So how is this space kind of changing with AI and analytics coming in?
Yeah, I think I'm really excited for the times that we are living, and how we are getting more information into the strategy design. With now used to take a lot of money and time to get information from the market. Not you with Gemini deep research, you can do like almost paper type of investigation on a customer, and what are their pain points, what are the opportunities, where they are in terms of orientation, let's say, in the market, how they are in their financials. So with AI, you right now have any type of information available. When you're dealing with B2B customers, it's funny because you will have a lot of variables, but depending on the market that you operate, you will have limited to very public information in terms of the price realization, let's say. So the idea is to enable the sales rep to have all of these at hand, but make it easier for them to act upon. So I think the preparation is still mandatory. I don't think that the sales rep is able to digest everything in one intake. They need the support of more. Something that I really like in PepsiCo, for example, is the customer team. When you have a customer team, you will have people from analytics, from customer insights, from RGM, from go-to-market, from finance, sitting together and designing the strategy to create value with the customer and aligning on priorities, and that will join or become a joint business plan, something like that. So in B2B, you have elements to build around a very comprehensive strategy, and AI is just speeding up the process for that, processing all this type of information. When you move to let's say the consumer side, it's also interesting, but it's less. I will try to take it simple, and it's the difference between having a sales rep and a key account manager. If you follow me, the key account can handle a very comprehensive set of information, but the sales rep will need very executional insights, and AI is just giving that in real time. So, but of course, you need to do the right preparation for the strategy.
Wonderful, wonderful. I want to kind of come to the next point, which is more around, optimizing marketing budgets. Across the board, what we see is most companies, they're getting their marketing budget slashed, right? And a lot of marketing teams are being said that if you don't have an AI approach, there's no way in kind of, going. So you need to have an AI speak in the way you look at marketing. And when I talk about marketing, I'm talking more about, right sizing or rightly leveraging the marketing budget, like, which channels, right? Should it be digital? Should it be in person campaign? Essentially, the whole market mix modeling. Because as you would agree that there's a famous saying that the irony of marketing budgets is you have visibility of one half and the other half get anyway wasted, right? So do you see that same? How are you kind of, looking at optimizing marketing budgets, and do you have some kind of a model to really say that, okay, I'm using analytics and AI to really right sizing, doing scenario planning? Do you see a lot of change companies are coming up with, especially bracing up to face the slashing of marketing budgets across the board?
Yeah, I think I will say there are two big conversations there. You have to support if you talk about consumer goods, there is this classical model where marketing will create the demand and sales will satisfy it, right? But there needs to be an understanding on the road to market. Where do we have the biggest size of opportunity, the opportunity size, or the right to win? How do we align both together on this is the market that I want to grow, this is the one that I want to, the classical BCG matrix where I want to grow, I want to maintain, I want to get out of that. And that's for sure the first thing we need to align with between marketing and sales. Then the problem is defining your baseline, right? Or identifying really what you're doing without any stimulus on the demand. And that's very critical. And that's where I see that AI is really helping us to clean out the data. And if you feed them with the right information, it's wonderful what you can do with AI and bringing together external and internal data. It's the level of precision is I haven't seen before, and that is giving you clarity on the lifts of the promotional activity, because that's the holy grail on the promotional activity, where you can attribute the lift in demand because of the activity, or because of the sales push, or because the stars were aligned for that product and everything went well. So trying to clean up the conversation in that direction is very powerful by you. It's very powerful using AI. So I think the key point for marketeers out there is to prove that their money is well invested and reducing this half that we always talk about. And now it's possible. I firmly believe that if you do the right work, you are reducing the noise on the equation and really identifying the drivers of the lift, whether it's sales or whether it's a marketing activity.
Fantastic. Now, one thing that we keep hearing a lot is, the ROI on marketing budget is always a lagging indicator, right? Because you do it and you see the ROI trickle in after a couple of, cycles, probably quarterly cycles. And by then, obviously, the field teams have different reasonings, because like, when I was in sales, my manager used to say that in sales, either you have results or you have reasons, right? So if you're not meeting your quota, then you better have a good reason. So is that one of the problems that you see, that no matter you use quantitative tools, you calculate a projected uplift, a lot of that is done using past data? Because that brings me to the next big conversation of change management. And I think that's the elephant in the room, that AI recommends that if you, let's say, put 30% of your budget in digital campaigns, it's going to potentially give you an uplift of 14%. All of that is predicated on machine learning data. Whereas the business mechanics is changing. There are new competitors coming, new products are coming in. So a lot of that data might be stale, a lot of that data might not be relevant. And therefore, you face a resistance from the field team saying that I know my customer, I know my market, I know what's happening, I know what's getting launched. Um, I don't really believe in the sanity of this AI, this AI tool is telling me. How do you, cross the hump on some of those conflicts in the organization?
I think it comes back to what we just discussed on, but being transparent with them. If you can deconstruct, of course, doing the post analysis, and show them the building blocks of each of the activities, and being really nailing down each of the stimulus that you have, external and internal, you can manage to convince those guys to believe that the activation or the investment is working. I have seen these type of conversations, guys that are really not keen to trust, and of course thinking that their effort is the one leading to the uplift or the results. And when you show them that it's a complementary action that will help them to get there, and really dissect with them one step by step where the effects, that's really powerful. And then you create allies instead of let's say enemies to the marketing promotion marketing activities, promotional campaigns, and they really understand that this is worth it. But at the end is really tricky, because the dissection of the activity is tough. When you have that and you overcome that, they will be the one actually suggesting you how to fine tune your activities, and that will add a lot of value, because the guys know where the point of sale is more active, at what time put the people promoting the product, or even though which events to attend, what time of the event is the right one to have the biggest audience and the biggest promotion. So depending on B2B or B2C, incorporating the feedback from the field is key to optimize, and it will be the leap forward for doubling and tripling the ROI of the activities.
Excellent, excellent. In fact, you're so spot on, Juan. I think there are a lot of positive upsides that AI analytics give the sales reps, which sometimes goes unnoticed. Especially, I want to talk a little bit about improving field productivity, because I remember 20 years back when I was in sales, I was on the field for 4 days a week, and literally 2 days I was doing admin work, right? Filling up reports and giving, Excel had just come. So we would be manual registers and call plans and all. And sometimes I think that's one way to kind of sensitize the field, that AI analytics is actually helping drive rep productivity so that the rep can use that time to do more strategic customer facing work. Do you see that happening often, especially in your organization? Is that one of the ways in which we drive change management or help the reps to embrace AI analytics and kind of, cross some of the psychological barriers?
Yeah, that's a great point, because management in every level is very keen or very eager to see this in at the field, right? You have Salesforce selling copilots or agents, and right now it seems like the CRMs systems are all running for having the best sales agent enabling the field. But at the end, it's I think is less is more in those cases. If you have a control environment, because depending on the level that you are managing or designing for, you can get lost in translation very easily if you load too much on a sales rep. So it has to come from a strategic to operational type of approach where you really put boundaries on what to activate in which channel, sub-channel, or regional geographical zone. And with that clarity, you can focus your sales rep. I have seen the sales reps lost in or navigating a lot of AI tools because now they have the power. Let's say they have everything at their disposal, and they are not they don't have the profile, let's say, to handle that kind of load. It might sound like a joke, but it's like when you are connected to the matrix in the movie, you have this upload of information that you can really handle. So the more focuses or more control environment for a sales rep, the better. If you move up one chain, let's say supervision, key account management, or so on, you can get a little bit more sophisticated. But at the end, you have to be mindful of the span of attention of salespeople, because I always say that they live in a monthly. The world ends and begins every month, right? So you have to be very mindful of what you give them and how focused they are in what is really moving the needle.
Yeah. So we were talking to a pharma company just a couple of weeks back, and I think one of the themes that came out was the biggest roadblock was the trust on the models, right? Like if a ML model is going to tell a rep that this is how your call plan guidance should look like, or this is how your post-promotional drip should be, you should focus on this particular HCP and not somebody else, and this is the right channel. The fundamental question is who's AI to say, okay? And therefore the question is, okay, somewhere we need to start because there's always a push and pull, right? So the top management wants to drive AI and there's a lot of resistance bottoms up. And then there was a trade-off to say that, okay, should we try to pilot this out in a matured market or an immature market? One school of thought was let's do it in an immature market because nobody has figured it out. So tomorrow, if things go south, then we can always blame AI and we now can get out of it. Whereas these other people said that, okay, you should do it on a mature market because then you'll have a baseline, then you can kind of do a control to say that who's working well, is it subjective, then you can bring in reinforcement learning group. I want to really understand what has been your experience on this. Like, how have you really driven some of this change management? Do you face that where people are skeptical? And same thing happened with chatbot, right? So a lot of people refused to go with chatbot because the chatbot gave you something that you didn't want it, and the whole thing was trashed, saying that okay, this whole damn thing does not work. How do you see that play out in your organization or the market in general?
I think the key is to define what you're trying to achieve. It's very different what you can accomplish in a complex market or a big market, because the variables are like a lot. It's like flying a Cessna compared to a 747, right? So if you don't have the layout, the board well designed and layout, you might be testing wrong things, right? So that's the key for me. Is designing what you want to achieve with each of them. I wouldn't say that testing on the small market is better than the bigger one, because you might be testing different perspectives or needs, but at the end, the speed beats everything, right? If you can go to and implement in a small market faster than the bigger one, because in the bigger one you have to align more people, go for the easier one and learn, right? I think we live in a world that testing and learning and doing mistakes fast enough to learn and to increase and to get into a virtuous cycle of increasing, but faster is the key word. So go for the easiest way to test something well designed and learn and try to use that to speed up things in other markets more complex, to have proof. In some cases, all you need is a well-designed pilot for a bigger market to open up to a possibility to test and learn.
Yeah, no, absolutely. I think, one of the reasons I really like interacting with you, because I think, Juan, you're one of those practical, grounded leaders who is not afraid to experiment and try out new things, but at the same time, you understand the ground realities, and therefore, what really matters is not a theoretical framework, but a practical approach. And it's a little bit like trying to build the plane as you fly. And like you said, you try out with a Cessna. If it works, then probably move to a slightly larger Boeing before you go for the A380 or the 747. I know we're kind of coming up against time. We still have 20 minutes, but we have to kind of leave some room for questions and all. One interesting piece that I wanted to cover is the alignment of supply chain with the commercial function. Because traditionally, these two functions, you have marketing, you have sales, and you have supply chain, right? There was a missing alignment between marketing and sales, but then there was a broader alignment problem with supply chain, because the commercial function always looked at supply chain as an adversary, right? And the supply chain was like last minute promotions, last minute bonus offers, stock not available, the classic problem in FMCG, right? So therefore, supply chain leaders were like so very highly, handsomely paid in the CPG companies long back. I think with AI coming in, what has happened is it has kind of integrated these functions, and each function appreciates and empathizes the problem of the others. What's your point of view on that? Do you see supply chain playing a more growth role? Is things changing, and how's kind of AI analytics helping bridge the the friction between both these functions?
I think the key point when we start that conversation is that probably sales are optimizing for service level agreement and logistics are optimizing for cost.
Yeah.
And neither should be wrong, right? You need the perfect role will be having the best levels of service, the best service level agreement with the optimal cost. But something that we often talk about is the customer is the one paying our salaries. So don't forget that if that person is not really happy with our service, it doesn't matter if you have the best cost. You have to prioritize the customer. And it's not just what the sales rep or sales team will say, is what the customer says, is what the customer needs. And that's why the road-to-market design is very important, because you can do some trade-offs and maximize the design of your value offering to get there the maximum level of agreement, or the maximum service level agreement with the lower cost. I want to give you an example. In PepsiCo, when in the foods piece, you own your road to market, and the logistic is the logistic team is it's inside sales. So you design your roads to sell to the mom and pop stores across the corner, and your sales rep is the same, driving the truck and doing the uploading, downloading, serving the point of sale. So that's like, for me, that's the best model that I know, because sales is optimizing the road to market, because they have the time of movements, they measure everything to optimize the level of sales, and the logistic become an enabler for that. That's very like unrealistic for most of the companies, where you have to do a third-party distributor and so on. But at the end, my point is still valid. You need to care about the satisfaction of your customer and do the optimization of the road to market based on that. In some cases, you will have to do some trade-offs in terms of not having the best cost to serve. But that's guaranteeing that you have the right level of customers, that you are developing your account, that you are doing the cross-selling, that you are pointing in the right direction with the customers and of course the consumers or users at the end.
Wonderful, wonderful. I think it's time we take a few questions because I think we have a few questions pouring in. So the first question comes from Sonali, and I think it's very related to what you were saying, that what's one KPI metric that forces cross-functional accountability, like linking sales volume bonuses to gross margin recovery? Can you think of a couple of KPIs that we should have a common KPI so that it kind of aligns both the functions and drives cross-functional accountability?
So if we think about sales, most companies will try to optimize or incentivize on volume while doing higher prices or reducing discounts, optimizing discounts, doing rebates. So probably the net sales are a very good way to optimize both, because the quantity and price should come along on optimizing the commercial contribution. So probably incentivizing everyone on net sales instead of just volume or price would be a way to for them to force the collaboration. And then many companies already have these net promoter scores studies where customers evaluate the whole value proposition of a company. And that's a good way to incentivize alignment across every single function: supply chain, sales, marketing, finance. If the customer is not happy, we need to get everyone on board to make that, to provide a solution and to fix that. So the net sales and the net promoter score it's great for companies to keep their objectives aligned with what matters the most.
Yeah, no, that's a great one. I'll take one more. I'm just going in a random manner, guys. So it's come from Ashok, and he says that in volatile markets like construction, how do you dynamically re-tier customers quarterly based on real-time profitability data rather than annual reviews? I think it's very topical for you coming from the cement market, right? So that's why I thought I'll just tee that up with you.
Yeah, I think it is not, I wouldn't do it that fast or that simple, because these customers are in large construction cycles. So these guys are in the midterm, operating in the midterm. So while you might be optimizing for one specific project, you have to be looking at the whole picture, because these guys will open 2 or 3 projects in the next quarter. So if you move them for, let's say, bottom of the percentile in terms of volumes and so on and conditions, you might be missing the big opportunity that is coming next year, for example. So I rather than optimizing like in real time, for that I will use more of a joint business plan approach. What is in your scope for the next 2 to 3 years? How do I play along on that specific strategy, where I can add value for you, where designing some ready-mix concrete formulas that optimize your square meters delivery, the height, the cost. So I think it's more of a value conversation that is the speed of segmentation that you can do. In other markets, I have seen this, and it's very necessary to react upon a customer that is declining or have a negative trend against the market. And that's where you also need to design a recovery plan. You can say what's hurting us. Is it the customer really losing sales, or are we losing share of wallet within that customer? Is he buying from another brand, and why? Right. So that's where I see the dynamic segmentation coming along to help correct the course of a customer.
Fantastic. No, I think that was a very comprehensive response. We'll probably have time for 1 or 2, because we also need to do the rapid fire round. before I ask Juan to give his parting advice to the group. So this question comes from Arjun, and he's asking, how do you upskill reps on new SKUs without overwhelming their daily routines, especially when onboarding cycles exceed 90 days? So I think it's a very relevant question. So new SKUs coming in, and you're expecting the reps to spend a lot of time on training at the cost of working on the field. So is there a way AI or analytics can really help in
Yeah, I think
not losing the
I will, I
productivity?
will, yeah, I will go 2 steps back on having a, let's say, a promotional calendar. If you know your entire year, the year, how they will come and flow against seasonalities or peaks of demand, you can design the seasonal the promotional calendar based on that, but also the training one, because for the peak season of a specific business unit or SKUs or set of SKUs or brands, you can train them in advance for the upcoming season and do the heavy lifting for them on specific topics that they want to use on the pitch to promoting that product. So I wouldn't try to do the download of everything at the same time. I would try to be very specific and aligning the training with the seasonality of each of the products. But that goes back to your strategy. If you're well aligned, like in pharma for the flu season, the vaccines, and so on, you have a specific seasonality for that. Now, if you have many products having the same, probably you start to think about designing a different sales force at all. Maybe you have the opportunity to specify this sales rep and dedicate them to a specific business and do like a split of functions because you're having too much on their plate. But it's a matter of how you size the load and the customer with the right selling pitch.
Fantastic. Interesting question from Nitin, and he's asking, with remote selling on the rise, how do you ensure pricing discipline during virtual negotiations without a real-time manager oversight?
Yeah, that's a good one. I always try to look at the pricing envelope. If you give margin to a sales rep, you will definitely define the walkaway price, but that's not enough. That's a closing argument. You should be targeting. You should be designing the conversation for a target price and an expert price, and you should start by doing expert and come it down probably and having the conversation design or the negotiation design around the pricing envelope and having the right elements to defend each of the tiers. That will be a good way to not to overwhelm the conversation or not having real-time information. Probably you already did it, but you have to settle for the conversation and not bombarding customer sales reps with new information during a negotiation. That's a no-go for me. That should be already sorted out before the conversation.
Good, good. I think Urvashi is asking, is AI in RGM more about margin expansion or revenue acceleration? I think it's a little bit of both, Urvashi, and it's just not either or. It also depends on the stage of the product. If you are trying to gather market share, you might focus more on growth and sacrifice margin. But as you stabilize, you start consolidating your margins. So I think it's a mix. No one's got this figured out. It really depends on the seasonality, what stage your product is, what's the maturity of your product, and so on and so forth. And this is an area where I think one AI and analytics can really help because it helps you reach a global optimum and do the right trade-off and not leave it to individual gut calls.
Yeah, I guess my take on that it would be the mix management is often a lever that might be forgotten for many of the sales reps on a daily basis. So us in RGM should be looking at that every single day. How do you handle the mix management, being channels, sub-channels, regions? That's something that is often overlooked by many. and that will itself give you marginal contribution without doing nothing. It's just accelerating a little bit on the most profitable customer or regional approach. So probably looking at the mix management will be the answer. It doesn't have to be one or the other. You can control your plane by redirecting a little bit of effort on those more profitable customers/regions.
Okay, so we're up on time. I know we have a few more questions. We'll try to respond to those questions offline. Unfortunately, we don't have time because I want Juan to be on the hot seat. So Juan, this is going to be the most fun part of today's show, where I'm going to ask you a rapid fire set of 5 questions, and you're supposed to answer it without the help of any LLM. Okay, very instinctive. It has to be very instinctive, straight from the gut. Okay, and a one-liner sentence. So are you ready? Should we go?
Yeah.
All right. So the first one is, what is one of the worst pricing disasters that you've witnessed?
I think it's unconditional discounts.
Okay. Spreadsheet versus gut. What is the rep default?
God will always win.
Always. Gut calls. Gut wins. Okay. AI pricing. Is it a game changer or it's just a mere calculator?
No, it's a game changer.
Fantastic. Perfect go-to-market in one word. A rep who has mastered the art of go-to-market the best. What would be a one-word exclamation for you in a sales review process?
Customer segmentation.
Okay. Okay. 2026 precision GTM future. Okay. The future of GTM, precision GTM in 2026. In one word, if you were to summarize how the future holds for us, what would be that one word?
I would say that it's also customer segmentation, like in real time.
Okay, good. I think you've passed the litmus test one. So before I let you go, I think we have, thank you very much for your time. And I think this was really, really exciting. It's early morning in the US and in Colombia, so we don't have our drinks with us. But I'm sure there are a lot of other viewers who are viewing it from Europe and India. They have their, drinks by them. It was really, really invigorating. Now, before I let you go, Juan, I think we kind of discussed that execution is outpacing strategy and execution is outpacing growth. If you go back to the initial phrase, that 82% of customers or firms have a strategy of some sort, and strategy is always fluid, always debatable. But just 21% of the customers, they get their execution right. So as a forward-looking RGM leader, what is one of your parting advices for service providers, your peers, tech product providers? How does RGM look like for you, or what are some of the areas that we should focus? What's your parting advice for the group?
I think we need with the AI era that we're living in, getting closer to the field is easier than ever. And practicality and down to earth strategies always kill McKinsey style type of strategy. So execution is everything. That's why you should focus on testing, learning small, failing. Failing is part of the process. I always love the quote from, I don't know who said, but by error, you're forcing your brain to create new connections. So that's the way you learn, really, and you perfect your craft. So failing small, doing execution right, and getting closer to the ones executing is the best strategy always. And with the AI right now helping us to get a lot of information in real time and getting back or getting actionable insights back to their sales reps, that will be my advice. get the closest you can to the sales rep and give them real-time feedback and actionable things to correct course. So don't fix on anything, challenge yourself and try to be close to the sales reps every single time.
Fantastic. So I think on that all important front, it's a wrap. Juan, it's a pleasure to have you here and talk to you like always, right? So I think your message is loud and clear that we have to take risk, we have to take bets. AI analytics is here for the real. No, we have to roll with the punches, no backseas. And I particularly like the fact that you're encouraging all of us to take risks, fail fast, not wait and wait at the end of 18 months and realize what you started was a science project. But most importantly, fail forward, so that if you fail, you are taking a couple of steps forward and you're not kind of taking a couple of steps back. So thank you very much, Juan. I'm sure everybody loved it, and unfortunately we couldn't take all the questions, but we promise that we're going to get back to you with offline answers. Have a great rest of the day, and we'll talk soon.
Thank you so much. Thanks everyone for connecting.
Bye.
Bye.